Hi there, thank you for viewing this week's video. Let's take a look at the indices and check out how they performed and also the outlook for next week. The trading at the beginning of the week was painful for the US markets as the US government and media keep stroking the possibility of war between Ukraine and Russia. All the three indices were pushed down to their respective major support. At last, the war finally broke out and the market was initially fearful, but recovered strongly from early losses to close in the positive region. As the unknown is now known, the uncertainty has become certain, the US market has managed to end the week significantly higher. Let's take a look at the charts. First, we shall start off with the Dow. And the chart will come on now. All right, so we are looking at the Dow chart here. As you can see from the chart here at the beginning of the week, we saw the Dow continue its sell-off to its major support over here at 33172. Then the broke out of the news that the Russian has invaded Ukraine. We saw the market was initially fearful over here at this point as it went down to test this major support at 32242, then a strong fight back to close above the previous support at 33172. Now, the initial fear only lasted less than an hour. Then the market was on its way to close higher. Then on Friday, we saw the fight back continue to help the Dow to close towards its resistance at 34257. So with this, we can witness a strong whipsaw or huge whipsaw as the index continue its remarkable recovery to close the week higher. So next week, probably the market will still focus on the war between Ukraine and Russia, but there are some economic data like the ISM data that are coming out, which may help its recovery to break out above its resistance over here. So it is very important for the Dow to clear above this resistance, and especially testing this resistance at 35025, because that might be a signal for a change of trend. Okay, in the past, the month of March tends to be a recovery month if there is a sell-off in February, and let's see whether this good tradition will continue this year and the market can end the month of March at the high. Next, let's move on to S&P 500. Similar to the Dow, we have seen S&P 500 got sold off at the beginning of the week to test its major support over here at 4218, which is what I can say it's expected, which self-fulfilling prophecy from the chart. And when the war broke out, the support was briefly compromised as the S&P 500, I beg your pardon, when opened at 4159, another support level, then around there, then it recovered strongly to close as a one, or I beg your pardon, as a one bullish reversal candle, what we call the bullish piercing. So the bullish piercing patterns got a confirmation as S&P 500 ended higher and broke out from its previous resistance, or rather previous support and resistance at this 4366. The next resistance to test is 4489. And it is important to test this resistance because, like I say, for the Dow, to testing the resistance can signal for a change of trend. Let's move on to Nasdaq. Right, the sell-off similar to the S&P 500 and Dow. Right, Nasdaq got pushed to its major support over here at the 13,083. Then when the war broke out, it opened significantly lower below the support at near its next major support at 12,563 briefly. Then it fought back all the way, forming the bullish piercing pattern, and got a confirmation on Friday as it broke up from this previous support turn resistance. The next resistance to test is 14,159, and that would signal for a potential change in trend. Let's move on to the Asia market. We have the STI. Okay, so last week I mentioned that STI had the first sign of weakness over here, as we see the candle patterns start to display weaknesses. And I mentioned that it is only confirmed if the STI breaks below this 3402 level, and it did. So we have an early correction as STI went straight to my targeted level at this 3298 as the news of the war broke out. And it went as low as this level at 3248, which is very near to its or it is at its major support over here, or crucial support at this level, which was previously a consolidation before it broke out to rally higher. Now it ends the week with an inverted hammer come bullish harami pattern, and this gives a glimmer of hope that next week there might be more recovery, especially when it tests this level at 3372. Now it is very important for STI to close at this level 3372, because that will signal for more potential upward movement, and especially if the index wants to continue its uptrend, it has to come back to this high at 3465. Now, there are some challenges though. One of the challenges is that the market is now struggling to digest the unexpected quarterly drop of OCBC's result. Okay, so some explanation over here. OCBC announced its result last week on this particular day, and you can see the index start to move lower here, breaking the support level, because OCBC announced a drop, 14% drop compared to its fourth quarter results. So fourth quarter 2020 compared to fourth quarter 2021, it has a 14% drop, and that spoke the market, especially it drags down all the three banks. And of course, the war, needless to say, has added salt to the injury. So next week, we want to see whether the market can put this so-called temporary drop, because if you look at the whole bigger picture for OCBC year on year, the annual growth is still up by 30%. And then we can see that the interest rate is going to go up in March. This is what the market is expecting. So we are looking at the potential movement from the banks going forward. So hope that it would come true. Next, let's move to Hang Seng. Hang Seng is again the worst performing index, as most of the major market recovers. Hang Seng, in fact, end the week even lower. So there are some point that that may result in this poor movement, is that with the Ukraine-Russian war broke out, for an apparent reason, because Ukraine used to be part of Russia or the Soviet Union. Russian is just purely trying to claim back their authority over them. Now the eyes are all on Taiwan and China relationship. So that may be one of the reason why the the Hang Seng is lackluster. Then next is the COVID situation in Hong Kong. While they refuse to embrace the COVID or to live with it, the policy that came out for the zero tolerance, COVID tolerance, will hurt its economy and therefore its stock market. So we are looking at the major index support at 22723, and if the index breaks below this low, then we may see the index revisit the COVID low at 2117. So it is a pretty crucial week for Hang Seng next week. And if it managed to rebound off from this support level, it must hit back at least 23818 and close above it to signal for a change in direction. Okay, so wrapping up, we are looking at that the funds are flowing back to the US market from the chart as they recovered strongly and emerged from the correction region in the wake of the outbreak of the war. The Asian market is still grappling with its recovery, especially Hang Seng, which is the only index that ends the week with a black candle. The worrying sign for Hang Seng as it hangs by a thin thread above its major support level. Breaking below the support level at the end of next week may signal for significant downward movement, and same for the STI as well. Now, a point to note as well is that March 14 to 15 is the FOMC, where the market is expecting the rate hike. So this will also sort of like help the market if the rate hike is below the market expectation, and a less hawkish speech from the Fed definitely will help the US market to recover in March towards April. All right, so thank you for viewing this video, and I will see you again.